Hello traders and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to be taking a look at a technical breakdown of the price of CAD yen as it has approached key weekly highs. Now we've seen the Bank of Canada recently pause interest rates, but we've got some CPI data coming up in Canada and the forecasts have come out and it's looking like we are going to see an increase to that consumer price index, which is going to put a bit of pressure back on the Bank of Canada to try and raise interest rates again or continue with the hiking cycle. Now we do have tomorrow as well the Bank of Canada Governor Macklem speaking, so investors are really going to be keeping an eye on what the Bank of Canada Governor says. But let's take a look at the chart here. We can see that we're on CAD yen weekly time frame. The last time we spoke about this currency pair was that if it held above the 95 area, we could see a move back up into the 100 spot 30 area, and you can see price has done exactly that. So there was a good 530 pip move there that you could have potentially looked for on CAD yen. Now price has reached this area of resistance. We have to ask ourselves the question, what's going on fundamentally in the market? Are sellers going to start coming back into this market? Is there a reason for this price to start reversing from here? Now, I don't see that reason just yet unless investors take the Bank of Canada Governor Macklem's statement or speech in a negative light. We're going to have to wait to see how that one plays out. But if he talks about resuming rate hikes and because of the problems with the consumer price index, then we're going to see a potential break to the upside here. Now I've marked in this area, we've got the zone already marked out between the 100 spot 30 area and the 100 spot 90, but you can see I've also marked out the 101 spot 199. Now the reason why I've done that is because it's actually these highs that formed back in December 2022, and the reason why I've done that is because price found resistance there, and ever since we've stayed below that level. So I think if price was to trade above it, I'd expect price to continue back to the upside, perhaps coming into sort of the 104 spot 50 area. If I just go down into a daily time frame, you can see that a little bit more clearly. Now what I'm expecting from a technical, so if I just put my technical cap on only, I would say that this is a time that you wouldn't want to be long this market, because we've recently tapped into that 95, we broke out, we rejected around the sort of 98 spot 50, we're traveling through that area and we're approaching resistance. So usually when price comes to resistance, you want to wait, you want to see how price reacts. So there's one or two things going to happen. I think if we drop back down to the 98 spot 50, buyers could be looking to get involved with the market there. But like I said, crucially, if price trades above this area here at the 101 spot 199, and maybe even above the daily 200 moving average here, then we could expect price to head even higher towards the 106s. Now obviously the Bank of Canada will probably talk about pressures from the oil prices as well, so that could come into it. Oil prices staying slightly steady ever since it gapped up, so there's been no real big developments there. But if we were to see an increase in oil prices as well, that could help fuel the tension with the Bank of Canada, and CAD prices could continue to strengthen. So definitely one to keep your eye on as well. The risk mood in the market has improved. We talked about that in the week ahead analysis. So the yen starting to weaken slightly, so that's going to be something to be careful or to be watchful of as well. But thanks for watching this video update. I really hope you enjoyed it. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex trading content, and I'll speak to you in the next video.